as well. But, at the end of the day, it gives you, if you can save some money on rates, and sometimes savings can be massive, depending upon how much debt you've got, obviously, but it's all relative.
G'day and welcome back to the Farms Advice podcast, where we chat everything farming, both on and off farm. These are the highlighting conversations that I love to have throughout the year, and apologies for the little gap, but we're getting back into the swing of things. We've got a bit of motivation, but hopefully a bit more discipline behind us, cracking into the silly season of Christmas. Hopefully harvest is going pretty well, but before you do anything, make sure you subscribe to this podcast or on YouTube so that more farmers can find the Farms Advice and pass it on to the next generation, and including this gen. So let's get into this episode. Let's get into harvest, whatever you're doing on farm. Let's go. Well, Deb Purvis, thank you so much for coming on to the Farms Advice podcast. Great to have your expertise in here, and also to welcome you to the finance sort of series we're putting together.
Thanks, Jack. Thanks for having me. Looking forward to it.
It's great to have expertise locally, but also to hear what others are doing, and especially for yourself, where you're based. It may operate a little bit differently, or new ideas down from other areas in Australian agriculture. We're so broad, aren't we?
Yeah, exactly. It's just so different from one area to the next, even within a state. But yeah, there's just so much going on in agriculture.
Definitely broad in the seasons at the moment. Tell us, how's the season going down around you?
So it has been a pretty good season. Certainly, a lot of the grain areas have done reasonably well. We did have a massive black frost through the mid-north last week, which has come right at the wrong time, and been quite devastating both for grape growers and cropping. So that's a negative, but other areas of the state are doing okay. A couple of drier areas, and of course livestock's tricky at the moment for everybody, and that's no different here. And the grape industry also, there's a bit of good news coming out of China, but there's still a massive oversupply. So that's certainly a difficult industry to be in at the moment too.
Yeah, that was welcome news with the China development there, but obviously not going to be this week for everything to go over and that oversupply of what we've been doing.
Yeah, exactly. Yeah, there's a long way to go, I think, before I think that changes things too significantly.
But definitely a sort of better outlook for coming ahead for producers down south and within the vineyard game as well. But before we get started, tell us a bit about your background and how did you end up in this role that you are in today?
Yep. I grew up on a family farm in the mid-north of South Australia, and it was a place that I enjoyed growing up. Loved helping Dad. Well, probably wasn't helping him, but I loved being out there in amongst it. I didn't start my working career in agriculture, but I ended up through accounting and finance in the rural financial counselling space for 11 years. And that was during some of the millennial drought and some pretty tough times for growers. So it was a busy time, but a really rewarding time. From there, I saw, I think, some situations where farmers needed some support dealing with their banks, and sometimes things weren't quite set up that were sometimes their lending wasn't quite set up in a way that was actually suitable for their business. And I saw an opportunity there, I guess, to sort of branch out into that space, and that's when I started Purvis Agri-Finance, and I'm basically a broker for specialising in farming. So, yeah.
So tell us about your firm, your position in it, and do you have people working for you?
No, I don't. It's just me.
Yep.
I don't have plans right now to go any further than that. I enjoy the clients that I have. We work well together, and I don't really have any plans to go expand it. But I do, I pride myself on my service and being very customer centric and really, spending time with my clients.
Really getting in there and holding their hand. Something like this year, I had an underlying theme of frameworks and processes for farmers that get involved, and even like us to get that sort of down pat as our family farm. But for next year, my theme is going to be capacity for farmers. Was that probably not the skill set difference, but the capacity for farmers to actually follow up and get the best deals for their loans, whether they're buying or refinancing? Is that what the biggest issue was and why you started?
Yeah, I think sometimes farmers don't tell their story well, and they sometimes consider their bank as someone they need to go with their cap out in hand seeking money, and it shouldn't be like that. I don't think they sometimes portray a confident version of themselves when they are putting forward an opportunity to a bank. So that's what I like to help them do, is actually tell their story and put together something that that showcases what they're good at and really puts their business forward in the best way possible.
Well, probably from the landscape, you see a lot more of telling the story, being capable of effective and sustainable management is coming through a lot more within the books of agribusinesses across Australia to sort of under the criteria for a bank to give out these loans as well. They want these people to tell their story, their background, and also that they're good managers as well.
Absolutely. And I went to a broker sort of session run by one of the banks not that long ago, and they were discussing what they wanted to see when we put forward a credit application or a discussion paper or whatever. And their number one thing is character.
Yep.
What are these people like? What sort of managers are they? What are their routines, and how do they do their job? How do they farm?
Yep.
Rather than what is their equity? What is their cash flow look like? They really want to know what sort of character they're dealing with.
Yeah, and it sort of tells the telltale signs of that business as well, whether they're able, have the capacity to continue through these drier periods as well, how resilient they are to bounce back.
Yeah, absolutely. And do they have a plan?
Yeah.
So, yes, livestock prices are really difficult and tricky at the moment. And I spent the afternoon last week with a livestock client, and it was tough. It was hard work to talk through, well, what are we going to do? How are we going to get through this period? And so that, the bank are just looking for, you having a plan, and it doesn't always have to be something that is immediate. Like, it could be a 2-year plan to trade out of something, a difficult situation. So and that's what we've been, that's what we were working on, is okay, when we got to get through this period, but then what is it, how we're going to, what is it going to look like going forward?
Be a fly on the wall there. What sort of strategies are you looking over that 2 years to sort of, are you looking to trade yourself out? Are you looking like structuring the loan to when you're expecting some cash flow when lambs or calves hit the ground, or you've got your crop in?
Yeah. So, I mean, it could be a lot of different, there's obviously, so farmers just have so many different things, but some of it could be seeking different markets, or, some of the best outcomes I'm kind of seeing at the moment with the livestock is people that have got, side agreements that don't involve Auctions Plus and don't involve, those other kind of sales mechanisms, and it's, some agreement with another farmer or something like that. So, they just sort of looking at those sort of opportunities. Maybe it might be keeping, sheep for a bit longer if they're able to. I mean, obviously, if in drought, that's not, but where I was this particular day, there's plenty of feed around, so it's, should we carry those sheep over, and then what does that look going down the track, and that type of thing, or is I'm running a few sheep and I have a lot of crops, do sheep fit into this anymore, or is there or do we reduce the numbers of our sheep and run a few less, or something like that? Yeah.
So early decisions, especially within these times, are going to play out a lot better rather than acting later. You get the later markets, a bit of the FOMO in there as well.
Yeah, absolutely. And I think, it's like anything, I guess early conversations with your bank, and I guess, the focus for me is finance. So I don't know a lot about the whole, the agronomic and the sheep side of it as far as the management goes. But if we see that there's going to be a shortfall in funds or some kind of, difficult period of time, then have the conversation early, so that if there are some issues, then we can look at other options or work through other things if we have to.
Yeah, that's good. So since you're the financing banking guru, where are we at with today's interest? And what are the possibilities to sort of get the most out of our bank loan, whether we're looking for a new one, refinancing, sort of in your hands to take this where you think it is, or like, are you expecting the rates to hold in the next couple of months coming into Christmas?
Oh, I don't have a crystal ball. And I think, even the banks answer questions. If I ask that question, they will answer it the same way. The market is certainly indicating that there may be a couple more rate rises, and we could see one as soon as next Tuesday, possibly. And it's certainly in the market rates that I'm seeing, that they are factoring in some number, something going forward. So I think we need to be prepared that there will be another rate rise, or maybe even two. But yeah, it's hard to tell. But that seems to be where they're leaning at the moment.
What about searching for lower rates? How do we go about that? Like tendering out our loans, refinancing, sort of restructuring. How does that play a role in improving our position with the banks, but also freeing up our hands on farm as well?
Yeah, look, I guess the thing that I find, there's a few things I think with, and it depends. I mean, farmers can do this themselves. There's nothing that and I'm sure plenty of farmers have done it themselves. I guess by using someone like myself, it does take a lot of the time that you would normally spend, because it takes a lot of time. If you do it properly, it takes a lot of time. And so that, I guess that's one of the things. But creating competition between the banks does, especially if, particularly when you're a strong business, that's when you're going to get your best outcomes out of a tender. But there are certainly other times, and one of them can be that you've been with a bank a long time, you've had a difficult succession plan, or something has happened in the past, and they can't forget that, and they penalize you. They keep penalizing your business, even though it's probably getting, maybe improving or something, but they still have in the back of their mind, and this comes back to that character thing. If something happened that they feel uncomfortable about, it kind of keeps carrying on, and sometimes it takes a fresh start with a new bank to be able to, kick that off your back, sort of thing, and start again. So there's certainly those sort of times. Succession planning is like after a succession plan or during a succession plan, that can be a good time to review your rates as well. But at the end of the day, it gives you, if you can save some money on rates, and sometimes savings can be massive, depending upon how much debt you've got, obviously, but it's all relative. But it can be nothing to be $40,000, $50,000, $60,000 savings in interest if you've been a little bit complacent and and been with the same bank for a long time, and perhaps haven't questioned as as often as you can, as you should be on your rate, it can creep up.
Do you think Australia, like farmers, the way we think, we're quite loyal, especially the traditional sort of farmers, well, the older generations, we're very loyal to our merchants, to our transport people. Do you think that sort of impedes on our ability to get the best rates within the farming game?
Look, there's obviously a real balance
Yeah.
between relationship and money, and I think that if you have a good relationship, and generally that relationship is with the manager too, it's not necessarily the bank. So when the manager moves, that relationship can change, and managers move around probably more than they ever have in the agri space. So that kind of can be a instigator for people to look around again, because the relationship has changed. But sorry, getting back to your question about not putting things out to tender and being loyal. Yeah, there are advantages to staying with the same people. When you need something done and you ring up, you'll probably get it done. If you're using a freight company and you need to get something done, but they're really busy, they're probably going to prioritize a loyal customer over just one that's just ringing up randomly. So there is a price that you possibly will pay for loyalty, and you've just got to work out what that is. And so if I do a bank tender and then we go back to their own bank, and every client is a little bit different, but they'll have in their mind, yes, I'm prepared to pay X amount per year because I want to stay with this manager or this bank, or
It's quite hard to take that emotion out of the financing side of it, especially if it's dealing with succession as well, for your expansion to allow for succession to happen how you would like it as well. That could
yeah. And on the other side of it is the sorry, no, I forgot.
All good. So going on the website and looking at being consistent with your financials, being on the front foot of how we can prepare, whether these instances come up, we've got the information ready to go. What do we need to be consistent about? What sort of headlines are farmers needing to look at a little bit more, maybe monthly, more than quarterly, I'd sort of look towards, to be on that front foot, to allow to adjust for the markets or to chase down your banker?
Yep, I think, obviously cash flow is the first thing that farmers can, get into a little bit of strife with, and it sometimes doesn't take long to be going from one point to the tight point, especially with the amounts of money that you spend to put a crop in or to run your business these days. It's lots of money. So cash flow, and I always think that a budget should be done annually and reviewed probably monthly.
Yep.
If things are going okay, you might be able to get away with it quarterly, but when if you're getting to the end of, and just before harvest or just before shearing, when things get a little bit tight, then I would be, you probably want to review it more often than that, because again, you don't want to be at the point where you've got $20,000 left on your overdraft and you've got to pay a lease payment or something, and you haven't sorted things out. So yeah.
What about sort of running through different scenarios, if it's going to be a great season, good season, or terrible season off the back of that, and sort of seeing what our bottom limit is, what we need to get from this enterprise compared to that enterprise, in a good, bad, and great sort of scenario?
Yep. So I think, after your main income for the year, so whether that's sort of shearing or grain harvest or whatever, that's the opportunity to review, okay, what do the next 12 months look like? Maybe what do the next 2 years look like, if you've had, especially if you've had, actually both poor or good seasons. And if you've had a good season, the temptation is to go spend this, do this with the extra money, where a bit of strategic planning and making sure that whatever you're doing is fitting in with your long-term goals is really important to be able to do that. And in a tighter season, it's about, okay, well, what can we do to reduce how much we need to spend? I guess, can we do that? If we don't, do we need some more funds, or is there another scenario, I guess, that we should be looking at and thinking about? And is this a long-term issue or a short-term issue? I think that's important as well. So I'm sort of seeing this sheep thing as a reasonably short-term for the very low prices, but I'm not sure that will we see those, excellent prices that we were getting previously. So it's probably, okay, what is my business going to look like with an average price going forward, and is that sustainable for us?
Yeah, there's been a few graphs, especially for livestock with the sheep markets. It went up to like around $10 a kilo for 2025, and then 24 remaining pretty steady. But we can't really rely on those that crystal ball sort of thinking. But looking at that, going back to the budget, if your expenses sort of blow out, the relationship with your banker probably comes in, and with the likes of yourself, Deb, even pulls on even stronger there, because the outcome is to sort of increase the overdraft so that you can get through this short-term period, this glut, to sort of set yourself up for the long term.
Yeah. So, and again, that's about telling the story. What does it look like? Why do I need to do it? And obviously at the moment it's because, well, I only got $30 for a sheep that I would normally get $120, $150, whatever it is. So that's the first part. But then it's, okay, so how does that look going forward? And what do I need to make sure that I can maintain the level of sheep that I need to be, sustainable going forward, and keep them in good health, and all the things that, or whatever it is, to get through to the next. And in this situation, I would probably be doing, especially with sheep, because it's so, they're hard to budget for. Cranes a lot easier. Sheep are hard to work through. So I would be doing a 2-year kind of scenario in that, and putting that to the bank with the story about, this is why we need to increase our lending for this period of time. I see us getting back to previous levels in 2 years, 3 years, whatever it might be.
And even like this sort of market was hard to predict for anyone. We didn't really have the benchmark of $10 per ewe if we were offloading, or even some were selling them for $2 in the sale yards, getting slaughtered through there. Now, bringing it back to sort of expanding our capacity, establishing family board meetings and how this sort of works in telling your story, but also bringing in more hands. You had this on your website, and maybe do you want to touch on the importance of establishing family boards, whether that's 2 or 10 people on it?
Yeah, I think family boards are a really important part of a farming business. I think it's good to have an independent person facilitate your family board, and you might even have more than one independent person that sits on the board. I think outside members can help reduce, if there's any conflict, they sort of help to reduce that and ensure that everyone is heard. And I think sometimes in and it depends on family dynamics. I'm sure there are families out there that can hold a board meeting themselves and everyone be heard. And obviously there may be conversations, but there are other situations where it's quite difficult to have a family sit around and actually have a conversation that doesn't have one person doing all the talking and everyone else doing the listening. So I think an independent person helps bring in everybody, make sure everybody has an opinion. And I think it also, having those outside people just separates that it's not a family meeting, it's a business meeting that has a family involved kind of situation. So I think it professionalizes it. And I think I think when you're thinking about who those people are, it's probably thinking about, okay, what are our long-term business goals, and what sort of expertise do we need? I mean, it's not, there's probably benefit from being somebody in that knows a little bit about the industry you're in, or if succession planning is part of, making sure, just having someone that has the skills that will help you enhance your business goals and challenge your current thinking.
Yeah, exactly. I think if you're not challenged, you're not really within that growth sort of period, or you're not sort of chasing that growth hard enough and filling those gaps. Everyone in the family, especially if you have kids that went off, often did their own thing and sort of bring their skills back. I may be biased, but that's what I sort of did, and that's what I wanted to do, to come back to ag and do that as well, and have that sort of different outlook or overview of what's going on the farm, or even seeing what else out there in the world there is, to see how we can improve our place.
Yeah, absolutely. And I think one of the most beneficial things that happens when you do that is actually becoming an employee. And I think being an employee makes you a much better, having experience as an employee makes you a much better employer. And I really believe that experience is as valuable as anything, if by doing something off farm before coming back.
Absolutely. So we've established the board, the family board, and understanding the economics of your farm. We go through, we do these budgets, cash flows for the accountant and the bank, but actually understanding the economics of the farm. How, or do you work within this sort of realm to get the most out of your farm, setting like goals, objectives as well?
Look, I think one of the things that I always talk to my clients about is what are their long-term goals? And some of them don't have, well, they probably do, but they don't articulate it or specifically write them down as goals. So that is one of the things that I talk about, and something, and it actually probably most often becomes part of my discussion paper that I put together for doing a bank tender, is this is what this business wants to achieve in 5 or 10 years, and there is a succession planning underway, or succession planning is not on their agenda, those type of things. So I think and that, coming back to when I was talking about when they have good seasons and wanting, thinking about what to do, because there's some funds there to maybe do something with. Well, you need to direct those funds towards whatever your long-term goal is. So if your long-term goal is, I want to expand, but you're already, at capacity of debt, then you need to reduce the debt so that you can actually manage your, do the expansion that you have a long-term goal towards. So I think, that's why having goals are really important, so that when you're making your decisions, daily decisions, you're thinking, do they fit with what I want to achieve in the next 5-10 years?
Yeah, and having that sort of longer term vision for everyone in the family and aligning them as well.
Well, that's right. And part of those meetings will be around, okay, so, is yours a little bit different to mine? And sometimes, generations can have different thoughts, because one generation has got 10 years of work life left and the other one's got 40. So they're thinking very differently. So, yes, and it's about working together to work out, okay, well, this is the 5, this is the 10, and then beyond that, well, maybe that is like the younger generation's, decisions rather than the older. So yeah.
Well, it's really like the risk appetite of how much you're willing to take on later on in farming career. You're probably not wanting to take on as much. You want to be a bit debt free, but also the younger generation coming through, they're looking for growth and to see where they can grow as well.
Yep. And that's probably what you would normally see, but I also have seen the reverse, where the older generation are still wanting to take on debt, and the younger generation are going, no, I want to pull this back. So it can actually be more as much about personality and your own, inner thoughts than as opposed to necessarily your age. But I don't disagree with what you said either. It definitely is, as an older person, you're probably not wanting to take so many risks. So.
As they say, no scenario is really the same. Tell me, does, like, across the vineyard financing, does it sort of act out the same way as it does in cropping and livestock?
Vineyards are they're quite different in that to change varieties or to change your enterprise mix is really hard. Like, it takes a long time. So you can't go, oh, canola's not working for me. We're going to change and change our rotation a bit, and it's not going to include canola or whatever it might be.
Too much.
Yeah. And so, so vineyards, if they change a variety, then I think it's 5 years or something before it starts producing again. So, and the trends in wine change, almost yearly these days. I mean, we as consumers, we just change our mind what we want to drink very quickly, and so they just can't keep up with the trends because it takes them 5 years to get to that point. So it's a really tricky game to be in, as far as it's just not as easy to go, oh, well, this isn't working, we're going to do something else.
From your position, do you think there's something that vineyards do financially that the cropping and livestock don't do, or vice versa, that could actually benefit the other sector? Or the long-term vision of what a vineyard needs to play out?
Look, I don't think so. I think that vineyards need the same. Yeah, they operate very similarly to any ag business.
With the vineyards, do they look at their products as a commodity? Unless they've got the bottle shop on the vineyard as well, or they're selling, exporting domestic and internationally. Is that something that sort of enhances what they can do rather than bulk commodities, 20,000 tonne of wheat this year? Is that something that finance looks favours towards, having that sort of direct to customer?
No, not necessarily. I think the wine industry is a very fickle industry. So it can be, there are just so many different options. You've got the bulk wine going overseas, you've got bottled wine going overseas, you've got your cellar door, grow your own and make your own wine. You can just sell grapes to other winemakers. There's so many different strategies, but then that depends on what region you're in, what type of wine you're producing, the different regions, and then the market, getting it to market, and those type of things are also the style of wine you produce has specific markets, I think, too. So it's complex.
It's really interesting to, coming from our background, we know nothing about vineyards, obviously, but also the listeners out there, to hear what other sectors are doing, and even that longer term vision for a vineyard. We can't just rip out the plants and expect a return in a year. You got to have that long term vision, rather maybe expansion, and then get your new variety in there. That's probably a good avenue to go down for them. But it's cool to see into it and see what you do and the overview of what you see as well. I think it's really beneficial to farmers of any sorts.
Yeah, I mean, at the end of the day, everybody needs, most farmers will need some kind of finance, and that's a given. But how we go about it for each sector can be quite different, and it's interesting. Keeps my job, keeps me very entertained, and keeps me thinking all the time.
gets everything flowing. So I've gotten a fair few questions about new entrants. They've been wanting some more topics for people looking to get into farming. What's some advice you'd give for someone trying to get into farming? They're looking to get a loan to buy a farm and be competitive within the auction game. How would you do that, or what language? How would you sort of prepare for this?
Look, it is a tough gig. There is no doubt about it. Getting into agriculture and getting into agriculture at a scale that is sustainable is near impossible straight up, unless you've got a few $1 million sitting in the bank as a deposit. It's hard work. I think the options are leasing leasing or share farming is probably a good starting option for someone wanting to start up. But even then, you could do a lot of that work and never be able to afford to buy your own. And I think if that's your goal, then you'd need to work pretty hard to save money and try and get to that. And the other option with some of the lease and share farming, I guess, you create relationships with landowners. Now they're leasing and share farming it for a reason, and it probably is that at some stage that land will be sold, and not always, so I don't want to generalize, but often that's what happens. So there's probably where the opportunity may arise to be able to purchase it in stages or vendor finance or something like that, rather than going to a bank with $1 million to borrow three.
Have you done much work within vendor financing or setting up those sort of agreements, and do they turn out pretty in the end?
Look, I haven't it's not really something that I get into, but I've certainly seen plenty of them, both in the rural financial counselling space, and then my clients sometimes have some vendor finance plus some bank finance. I think, as long as you have gone through a lawyer and got a solid agreement set up, then it's probably no different to any other lending sort of relationship. It can get tricky, I guess, if for some reason the land, the purchaser can't make a repayments and things like that. I guess that can be tricky. So I guess as a vendor, if you're going to do vendor finance, you need to be prepared for those sort of things. But on the whole, I think there's been some very some great outcomes for people that maybe couldn't get into farming or couldn't expand and have been able to through that option. So
we'll have to see how the next sort of 10 years rolls out as the boomers sort of come off farm. They're looking to pass it on succession, or if they have no one, they're looking to sell it off, and see how that may work out, different sort of scenarios. But that's good. Thanks for touching on that. One piece of farms advice that you'd like to pass on from this episode to any budding listeners out there, what would that be?
I think for me, it is know your numbers and understand what's going on in your business and review your expenses. I think quite often we make decisions on the fly out on the tractor or feeding the sheep and go, oh, we need to do that, but maybe don't consider the economics of it as carefully as you should, and then it's done and it's too late. The money's been spent and maybe it wasn't the right plan. So I think it really is, take the time to review your budgets and economics when you're making decisions.
Absolutely, that's fantastic. Thank you for your farms advice. As well, we'll have the disclaimer at the beginning of this episode, but not to be taken as financial advice, of course. So for you, Deb, where can we get in touch for you? And actually, in the beginning, you didn't name the region that you're working within, how far you go. Where can we find you?
Look, I've got clients all over Australia, Western Australia, New South Wales, Victoria. I mean, most of them are in South Australia. That's where I am. But certainly I've worked with others, and one day I'm going to do a trip around Australia and go and see all of them because there's some really cool places some of them live in. So but yeah, I can be found on, I've got a Facebook page, Purvis Agri Finance. I am on Instagram as Agri Finance Deb. Twitter, I love Twitter. Well,
So do all the farmers.
love hate relationship with Twitter, but anyway, yeah, I put my newsletters and blogs up on there, so that's been good. Got some good feedback from that, and of course my website purvisagrifinance.com.au.
Beautiful. We'll put that link in the comments. So for anyone listening right now, you can just go down whatever platform and you'll be able to go to Deb's website to check her out to see if she can help you. Deb, thanks so much for coming on to the podcast. Great to pass on your expertise.
No worries. Thanks so much for having me, Jack. It was great.
Thanks to Deb Purvis for giving up their time, and also the guests over the years now. We're going into our 4th year for 2024. It's fantastic to have this sort of knowledge service for you on the go. You don't have to pay anything, no paywalls. It's purely just for you, farmers of all types in any sector, niche products to livestock, cropping, horticulture, those larger sections. We're here to service the needs of you so that you can grow your farm, your personal development, and carry on your family legacy. That's what we're all about. Hopefully you got a fair bit out of this episode, but don't let the conversation stop there. Come and follow us on social media. Instagram's pretty big, TikTok's even bigger, but we love a good yarn on Twitter, Facebook, wherever you can find us. Farms advice to pass on the knowledge. See ya next Tuesday.